Perfect. All right, Rai, I think we can go ahead and get started. Today, we're going to cover a little bit of everything. Markets, we're currently in a corrective state. We'll discuss, our thoughts on that. We'll also cover the leading groups and kind of where the rotation is going at the moment. And then we'll dive into some stocks that we're both focused on next week and into the next few weeks, and then take a bunch of requests from you guys and give our thoughts. So this should be great. As I mentioned before, this is being recorded. If you have any general comments, please put them in the chat box. If you have any questions for us, please, to keep things organized, put them in the Q&A section. We'll try to answer as many as possible. And thanks for tuning in. This should be a lot of fun. We want to keep this kind of informal, engage with you guys. So please ask questions, leave comments in the chat, and chat amongst yourselves. And with that, I think let's dive into first kind of the overall market, and Rai, I'll hand it over to you.
Yeah. So to get started, if we could get someone, folks in the chat to kind of put what exposure they have in the markets at the moment, that would give us a good idea of how you're positioned, what you're doing, and we could get started. Yeah. So S&P, we'll take a look at S&P, Qs, and IWM, IWO. So what we're seeing, in the markets, what you want to have is some sort of system, some sort of exposure level, right? You can have the best setup in the market, and it's one of the 5,000 stocks or 6,000 stocks in your universe that may be working. But what you need in the markets is some sort of system to say that, okay, I'm allowed to be aggressive at the moment, or you kind of switch it off, and you have to step back a little bit, even if that means you're going to miss some opportunities, right? So that could be a simple moving average system that you could put together for yourself to dictate your exposure. Or it could be some other pivot level system or what have you in the market. So with the S&P, what we're seeing is we're testing the 65 EMA. The stock market had a incredible run from March all the way to July. So this is one of the first deeper pullbacks that we're seeing into the moving averages. And we can see to the left what we had was a reclaim, right? A launch pad form right around here. We consolidated and then we rallied. And this was the moment, right? This moment from May all the way to mid-July was the moment to make a whole bunch of progress and a whole bunch of money, so that when this happens, you could kind of sit back, relax, and see the market from an objective perspective. So the S&P at the moment, to keep it super simple, if you don't have a system or you're building a system, would be to just track the 10-week line, right? This staircase that we see right here is the 10-week line, and you could basically set an alert on that and see whenever the 10-week line gets reclaimed, or whenever we close above the 10-week line, you're in pretty good shape, right? We reclaimed it here. It came back, tested the 10-week line we held, and we kept going and we kept going and we kept going, right? So it's a very simple system for you to say, I'm allowed to be aggressive. I'm allowed to put on positions. I'm allowed to go out and place a trade with higher position sizes, or I'm not allowed to do that when the markets are below some of the key moving averages that you could track. The 10-week line, which correlates with the 50-day simple moving average most of the time, is kind of a very simple system for you to increase or decrease exposure, so that you could see higher lows in your equity curve and you can make progress. The progress that you made here won't be lost as soon as we undercut the 10-week line here. Richard, any thoughts on the S&P? We're just, from my perspective, what we're seeing is a very normal pullback consolidation, and some more sideways action over the next couple of weeks will kind of set us up for Q4 and the end of the year. And I think, after this tremendous run we've had in a rally, a lot of people that were kind of flushed out in 2022 gave back a whole bunch of money. Kind of, it was a perfect storm for us to kind of have a counter rally. Now we're just pulling back, and we'll see what happens over the next couple of days.
Yeah, just some thoughts here. The 10-week line is great, especially if you're more of a position trader, intermediate term trend trader. That's a tongue twister. I personally kind of favor the 21 day or 21 EMA as kind of my short term, be aggressive, don't be aggressive. And that's very similar to your purple line there, I believe, is at the 21 day.
Yes.
So, that does a great job of kind of aligning with the trend from base to base. You can see it broke. There was that gap down to that level, and then we kind of broke below that. And that was when ranges kind of expanded, things got more choppy, leaders were breaking down more. So that's another great moving average to build a exposure rule set or trend rule set around. So definitely highly recommend checking that out. Um, looking at,
Also, I think
yeah, go ahead.
something you pointed here was
The
this
gap.
gap down, right? This
Yep.
kind of started it all, and this is something that Oliver Kell is big on and kind of taught me in the markets with our the swing trading masterclass was he said unfilled gaps to the downside will create momentum to the upside, and unfilled gaps on the top side will create momentum to the downside. And it's really as simple as that. We saw a gap down in the markets. The market didn't even attempt to rally to fill that gap, right? Overnight, whatever the situation was, could have been a news catalyst, what have you, but we never came back and attempted to fill it. What you want on gap downs is for demand to come in and for price to push back into that gap down, which is what we didn't see, and then that kind of rolled over into the correction on the spot.
Yes. So now that we're kind of in the spot, what I've been watching for is looking to the left, seeing kind of key levels where we might find support. Just about a week ago on Friday, we had a big upside reversal. I don't know if you want to go to the cues yet, Rai, if you want to stay here. But I was watching this level on the left-hand side, if you can draw that trend line out where we got an undercut and reclaim on that Friday of that key level. And just looking for signs of constructive bottoming type action, which is big upside reversals on high volume, upside reversals. We had a decent close on Friday. And I can actually maybe draw in Zoom that trend line here I was talking about. So I was watching this level over here. You can see that we undercut that, reclaimed that, and we pulled back pretty much that level here on Friday. We haven't broken that again, but bottoming is a process, and it's still choppy out there. Still ranges are pretty wide, but we're starting to see the signs that maybe things are getting a little bit better, and we'll talk about stocks as well. But yeah, that's kind of what I want to focus on, is use that 21 EMA 21 day as your intermediate term trend, and then looking to the left. Ross has nailed this into my head. Look to the left. O'Neill would always tell us, look where we could find support. The 200-day isn't on this chart, but that's way down below here. So if we do correct further, that could be another level of interest. But yeah, that's kind of why I've been watching. What have your been thoughts, Rye?
Yeah, I mean, what we see in this pullback is a little more, it's a staircase down instead of an elevator down approach, right? So we could still
Which
find
is
names.
constructive. Yeah, it's kind of
It's
more
very
normal. Yeah.
yeah, it's not one of those post 2022 or 2022 pullbacks where we rally and we know this is an oversold rally and you have to get out. If you're going to go trade that oversold rally back, 6 to 8 months ago, if you did that, you had to get out of the way because you could see you would have maybe a few reversal setups, right? No proper pivots, few reversal setups, a oversold rally, and then everything would just, you would get a rug pull, and then you have to get away, from the markets very, very quickly. I am not seeing that at the moment. I could still name, 8 to 10 charts off the top of my head that are acting well and are, enough that could lead or continue to, once we consolidate sideways for a few, lead the market higher. So I'm not seeing this elevator action. I'm kind of seeing the staircase down, slowly, and we'll consolidate. And what Richard said was maybe this could be our higher and low, right? A very simple way to gauge it is if we get a bottom wick, you just set an alert here on the Qs or the S&P 500, or you could use the QQQE, right, which is the equal weight, to just gauge how the market's going to, what the market's going to do. And if it continues to hold this low from Friday, then things may, end up being very constructive. And then you can also have the 21 day, like Richard said, the 50-day on the top side, or the 10-week line, whatever suits your style on the top side as confirmation. Okay, things may be improving now. And then you go back, you keep the markets on the shelf, and you go back to looking at individual setups and seeing how you could build exposure in the markets again. And because that's your kind of switch on.
Yeah, you definitely want to consider both. What are
Yeah.
individual stocks doing and what are the indexes doing? And I like to look at multiple indexes, the SPY, the QQ, and the IWO. Leif Serede, I think, mentioned the IWO in an interview a few years ago, and it's really good gauge for more kind of the growthy momentum type names. And you can see this has been hit a little bit harder than the QQQ because actually some of the mega caps have held up pretty well. I think we'll touch on those in a bit. You can see this also had very similar action where we pulled back, but see, this is a great example. Once we get below that declining 21 day, the environment changes a little bit. We get a more sustained downtrend. It's sharper. This is sharper than the QQQ and SPY, but once again, big upside reversal. We're near to the kind of this area where we had this gap here and potential higher low forming here. So this is kind of a potential start. This obviously we could lose this low. That's why it'd be great to have an alert there, but it's a start. We're looking for signs. We're building a case that the market could be changing trend a little bit, going from a more corrective mode, sideways mode to more uptrend. We're not seeing that just yet, but we're seeing the signs that they could be starting. So, Rai, do you take a look at this ETF as well?
Yeah, no, in recent times I've incorporated especially the equal weights because they give you a bit, a better picture of breadth as well in the markets. So it gives you, the S&P 500 and the Qs are very heavily weighted on the top tech stocks in the market. So that action could be skewed to the downside or the upside sometimes. So it's always good to track the equal weights and especially the IWO as well. And one thing I do want to emphasize before we get into stocks here is just having a exposure system is super important. If you don't have one, you could build one, right? You could start today and you could really build that, and you could just have a simple, start with your 21-day EMA, for example, or 21-day SMA, and just look back and say, this was a period in the market I could have went long. This was a period in the market I should have been cash or short. And you'll see just implementing that, something that simple will allow you to catch this and get out when the things are not working. So
and
I think that's super important.
Yeah, it seemed like in the chat, most people are maybe 0 to 20% invested, which I think is about right. Not pressing the gas, maybe putting on some testers on here. We had that nice week last week. We had that big down bar on Thursday, maybe shook some test trades out. But yeah, I think that's about right for the environment.
Awesome. So Richard, we could cover quickly the ETFs next.
Yeah, this is really cool in Deep View that you set up, that you just
Yeah,
showed me. This is sick.
I have a watch list with a whole bunch of ETFs that I track and kind of review on a weekly basis. And something in Deep View is you have this absolute score, which is basically price-based performance. And you could see the rotation in the markets from a 1 month basis. So on a 1 month, we see, I just sorted my ETF list with this AS score of 1 month, and you can see that what's working in the markets from an ETF perspective. And it's very clear that, yes, we're seeing rotation into energy. Some of the uranium stocks are starting to work as well. And that's where, that's kind of the place to be while we have correction. And if you look at the bottom of this list, you'll see what isn't working. Obviously, the FFDY, the solar stocks, in terms of their performance, are not doing well, and that's the bottom of our list as well. So this gives you a really clear picture, just adding this column, having an ETF list, and you could clearly see what's working the last month and what isn't working the last couple of weeks.
And this was confirmed, every Friday we kind of have a meeting where we talk stocks and how the week went and, what's on our watch list going forward, what trends we're seeing. And yesterday we all kind of, coal and energy look like they're pretty solid. We're seeing some rotation into pharma and biotech. Yeah. So again, you want to analyze the indexes, industry groups, stocks, build a case all together. Because sometimes the stocks can look a lot better than the indexes, and there's kind of hidden strength. But when everything's confirmed, everything's moving together, that's when you get some powerful moves. So I mean, look at this. You've got kind of a strong power move up and then a flag sideways on whatever PPH.
This is pharma ETF.
And you'll see this type of pattern in a lot of these names. So it's really helpful to look at this list and use that absolute strength score. It's a clear picture of where's the rotation going right now. So this is great.
Yeah, for this ETF list, I do see a question. I'll just copy this over and paste it into the chat. This is not a preset list. We don't have preset watch lists just yet, but we will soon enough so that you guys can see Some maybe we'll create, a ETF list and all of that stuff. So here's the list. It says I'm Richard Moglen, but I'm not. But
I'll just take the credit. It's all good. Can you bring up the QQQ or SPY one more time? Because Leo had a question about. Let's talk about Thursday a little bit, Rai, because I want to hear
yeah,
your
yeah.
perspective on that. Because it for me, I look at that bar. It's the widest range in quite some time. That could be a big negative, or it could be kind of seller exhaustion. Depending on how you want to look at. There's a lot of interpretations, but yeah, how do you, what are your thoughts on that day? Oh, are you back?
I'm
Yeah,
back.
yeah,
Yeah,
you're
I'm
back.
back. I'm back. It might be my Wi-Fi, but lots of charts.
Yeah,
Let's see.
bring up that chart when you
Right.
can. And yeah, good question, Leo.
Yep.
And as I mentioned before, if you have any questions as we go, leave them in the chat. I see some really good ones coming through. So thank you guys so much. Cool. Yeah. So talking about that candle, right? That
Yeah,
Thursday.
so I do have a few thoughts on that. So it it was the perfect storm, in my opinion. Like everybody in the world was basically watching NVIDIA earnings. NVIDIA reports well. And the thing that we are talking about, me and Ross were talking about was this thing is at a big psychological level, which is 500, right? It's going to open close to that. And a very simple gauge in the market for that particular day was, is NVIDIA going to hold 500? If it holds 500 and trades above that, you're going to see the breadth, the aggregate breadth in the market and the sentiment stay positive. And if it's not going to hold 500, which was in the first couple of minutes, it didn't hold 500, it moved below that. What we saw was kind of, sentiment changing. Oh, NVIDIA is fading, everything else around it is fading. And then we saw that Qs, opened at the high, closed at the lows of the day. That's perfectly fine. I think that was a good way to kind of flesh out all this, euphoria, whatever you want to call it. Everything was gapping up. We actually had our TML talk that evening, and we were planning, what are we planning? What are the different scenarios that we're supposed to plan for with a gap up? Every stock we talked about was gapping up, and the messaging was just wait for the market to kind of dictate what it wants to do and watch the NVIDIA 500 level, because that's a huge psychological level on that name. And it's as simple as that. And as soon as it didn't hold that 500, all you have to do, you'll see all the stocks kind of came back in, did a gap fill after gapping up maybe 1%, 2%, whatever the case might be. And now we've kind of fleshed out that, sentiment in the market where, things might gap up and go and all of that stuff. None of that happened. We kind of didn't ruin much of these patterns that we will talk about, right? VRT opened up into new year-to-date highs, came back in, kind of flushed that sentiment out, didn't ruin its pattern, and now we're seeing constructive action right after that. So I think from that perspective, as long as we're holding this low, it's a very easy way to say we're still consolidating, right? We don't need to. And then the Friday low is another way to kind of gauge where the market's going to go. And you could do that on the QQQE if you want to do the equal weight, or you could do it on the Qs. Just a very simple way to gauge where the market's going. We don't need to kind of say, oh, this is the very top, and what I'm going to be absolutely bearish or 100% short. You could do that if that's what your system says under a declining 21 day or a declining 50 day. That's perfectly fine. But I think that day was net positive because it flushed out a lot of euphoria in the markets in a single day. We opened at the high, closed at the low. Now we kind of reset and wait. And the easiest thing you could do here on, if you're still tracking NVIDIA, just put an alert on 500, right? If it were to come back in, have a steeper pullback, that's perfectly fine. And if it were to go back into this 500 area, you'll see, just the aggregate breadth in the market from a growth semi, that type of perspective will kind of staircase up as this is kind of seen as the poster child or the leader on this particular cycle.
And
So.
it's still holding up pretty well. I mean, it's above the moving averages, so we'll see. I wanted to ask you about Friday as well, because we also got some additional fear that day. We had, I think, the Powell speech, where intraday we were kind of hesitating. We sold off a little bit, but then we had a pretty good close. What are your thoughts on Friday's action?
I think Friday's action was more so like it was the obvious move was follow through down big, right, and have an equivalent day and continue the momentum lower, and the market will never do what's obvious. And it's as simple as that. So all we need, I didn't kind of anticipate this. Things, outside of NVIDIA, this thing, if we're in a deep correction and things are about to just, elevator down, I should not be able to find things like CELH, VRT, and some of these other names that we're going to look at, right? We're seeing some rotation, like we said when we went to the ETF list. We're seeing rotations into the energy and the pharma space, but that's still within the markets. Things are not leaving. So what I think is we just need a little bit of time, right? A little bit of sideways action for this higher low to kind of hold. And the longer this holds, the setups will develop on an individual basis so that we could get our exposures from 10 to 15 to 20%, closer to 40, 50% whenever that happens.
Yeah, and there's some questions. Obviously, we kind of all saw the David Ryan tweet. He mentioned, we've kind of seen the highs. I'll preface everything with David Ryan, amazing trader, respect him so much, all of that. I'll just say, make your own decisions. That's his analysis, but your system cannot be, I'm going to wait for David Ryan to tweet and follow what he says. So he could be right, he could be wrong. We'll have to see.
And
yeah,
and I think that tweet brings up it's a good thing. I think he tweeted that. So what he's doing is he's David Ryan, and none of us are.
he's the man.
He's the one that won. Three straight years he won the United States Investing Championship, built an incredible amount of wealth, continues to trade the market. His son David Ryan, right?
Sean. Yeah.
Oh, sorry, Sean Ryan. Last 3 years has consistently performed. So all of that is perfectly fine. That tweet itself, what he's doing, he's anticipating the action 1 to 3 to 4 to 5 weeks from now. And he's saying that the Qs have put in the highs for the year, right? That's all he's saying, but he's basing that on his experience. And that's, traders when they're in the markets, he's been there, 3+ decades now, right? 3+ decades in the market. They are allowed to anticipate because they've seen this situation before, and they're connecting this current present state in the markets based on their experience. They're kind of in the anticipation mode. Not all of you here will be a David Ryan. You haven't been in the markets for 30+ years. So you should kind of take that with a grain of salt, because what you want to do is when you're 30 years into the market, you will be talking like he's talking on social media. That's all he's doing. He's anticipating. He's saying, I don't think this year the Qs are going to make a new high. That's not a huge statement, right? But I think it's just kind of blown out of proportion. All he's saying is we need a longer consolidation, 2+ months, so that we could see a new high in the Qs. That's how I interpret it. A lot of people, it's time to go. He might not even go short. He might be cash, right? He might not. He might be completely wrong, and in Q4 we see a new high. That does not matter. All that matters is on an individual basis. If you have a system that tells you the switch is on, I'm allowed to be aggressive. The switch is off, I'm not allowed to be aggressive, on an individual basis, not a tweet basis, not a person telling you to do something. That won't work. That's not how David Ryan made it 35 years in the market and built a massive amount of wealth and an amazing track record, right? He didn't sit there waiting on someone to say what they're supposed to be doing. That's not how he made it. So I think that part is important. I think, the tweet just saying the Qs are not going to make a high this year. And that's not a big, in my opinion, not a big statement. It's just saying we need some consolidation, be cash or be short. He's going to be cash and short, but that doesn't mean, everybody's wrong, once in a lifetime when they're trading the markets. We just have to see, based on our systems, how that plays out. And if he's right, kudos to him. He's anticipating based on his experience, and that's why he's a David Ryan, right?
Exactly. And Juan pointed out, there are 4 months left in the year, not 12. A consolidation for 4 months, it could for sure happen, and it would set up some amazing opportunities on the other side. So consolidation is good. It's healthy. We've had a nice run. Now this is setting up new bases, right? And people should be excited about that.
Awesome. So can we get into individual names? I think that's enough about the markets and kind of the ETFs, right?
Yeah.
So
Do you want to go over kind of the stocks you're focused on, and then I'll throw out some names as well, and then we'll get some ideas from the audience here too.
yeah, I haven't updated my focus list, but we could take a look at it. So CELH obviously above the 10-day, right? Anything at the moment with the S&P Qs or the IWO below their moving averages, anything above the 21-day or the 10-day is considered relative strength in the markets, right? That's how you could build your bigger universe. Very easy. Scan for stocks above 10, scan for stocks above 21, put average dollar volume and look for common stocks. And you'll have a big, subset or universe of things that are acting well while the market figures out what it wants to do. So CELH is one. I'm just tracking CFLT, not really interested. I'm tracking IoT. I like what it's doing. When it came back into this high volume day, pushed, came back in, saw support come in, held for 2 days. And even on Thursday, that's the NVIDIA day, right? We could call it that. It didn't really pull back. And then Friday kind of made a little bit of progress. So that's one I'm watching. I'm obviously watching NVIDIA to see how it acts as kind of going to dictate the semi space. Splunk, if I want to zoom out, we could talk about this one. So this reported earnings the same day NVIDIA reported earnings, and obviously a lot of attention wasn't here. But the fact I like this pattern, and I'll kind of draw a few things on here to showcase why. The reason is we're coming out of this giant consolidation. And this consolidation lasted for February to August, right? Couple of months. So about 2 quarters. And this thing gapped right at the top of that consolidation. So anybody that is short over the last 6 months is going to be thinking, what am I supposed to do here? Right? They're all underwater. Anybody short. And if you were to zoom out, this name just trades like really bad, and has been in this giant base for quite a while. If we were to just take a look at something like that, so everybody that has shorted or built a short position, whatever the case might be, as it built out this this giant base, is questioning themselves all at once on this particular day. So even though we saw the fade in NVIDIA on this particular day, we didn't see a fade on this one. It could have very easily went in and completely came back in and put a really bad candle like Autodesk did right here, right? Autodesk put in the exact same candle, the Qs look like this, NVIDIA looked like this, everything looked like that. And Autodesk also reported earnings, but Splunk didn't. It didn't do that. So that's just one clue that, you could take away from this is on a relative basis, this one didn't pull back. And then Friday, we saw, some increase in breadth in the markets, and this one rocketed higher, right? And we're now at the very top of this multi-month consolidation. And I think that's something to watch, because if this goes for, for a day or two, more and more people are going to be questioning is this done basing? Is it, anybody that was short is going to go, cover, anybody that is interested in going long, and then the market forces are all going to point in the same direction, which results in an uptrend for a stock. So that's another one.
Wait,
Richard,
before you move on,
yeah.
yeah, there was a question about overhead resistance, which you're kind of implying. But yeah, what are your thoughts on this one? Obviously, it's near the top of the multi-month range, but going a little bit further back, there is a decent amount of overhead,
Yeah,
pretty
so
close to this level.
I think on a short-term basis, anybody, here is going to is going to fuel the action. The fact that it didn't fade is relative strength to me. So the way they reported earnings was also good. It was a 69% surprise, and sales also grew. But overall, there was a positive reaction to earnings. What I'm saying is this one's one to watch, because Thursday it didn't fade, right? And Friday it saw a moment in the market where something was, things were okay for that one Friday, and it made a lot of progress, right, on that gap down, and we saw secondary demand come in. Obviously, I'm not saying this one's going to go straight up right into 160, right there, but we're right at the top side of this multi-month consolidation, and I think that could really feel. It's kind of like the neckline. You see this blue faint line that's going across, right? That's used to be support. Tried to rally, came back in, completely broke down, acted as resistance, built a bigger base. Now we're right at that, key pivot area on this particular name. Okay, a few others I'm watching. Obviously Upwork. This one kind of failed that break. So we had 14 days of consolidation below that 15 spot, broke out, came back in, and is now holding the 10-day. I'll continue to watch this, mostly because what's going to happen over the next couple of quarters on this from an EPS perspective and also a sales perspective. This one is acting quite well. So that's one I will be, another one that I'll be watching next week. And obviously VRT. So this one has acted super well above the 10-day. Again, very simple. If you were to scan above the 10-day, this one's still above the 10-day. And Friday it saw, increasing volume on an up day, shows you that there's a lack of sellers. And then as this pulled back, you see these orange days that are kind of highlighted. That means that the volume on these days was relatively below average. So it's pulling back on low volume. It's going up on increasing volume. So that's your very simple price and volume relationship, and it's maintaining that quite well.
Yeah, and in addition to VRT, Ryan Hartman in the chat just pointed out something good. I've noticed other electrical component companies acting well. In addition to VRT, CLS, OSIS, and POWL, they all look pretty strong. So that's exactly what you want to do. You want to focus on a group that's acting well, and then identify the most promising opportunity in that group. This one, I think this is the second or third gap, so that is something to consider. But this is exactly what we're looking for: stock showing relative strength in this type of tape.
Yeah, and it's also the highest volume gap, so that kind of
Yep,
negates the fact that again,
resets everything. Yeah,
yeah. So this is the fact that this gap was about 800K volume. There's a lot more interest in the name up here
yeah.
than
What was the
the
surprise on that EPS?
we
No
don't
data
have
for that.
one. Yeah, we don't have one yet.
Yeah, interesting. Yeah, nice volume coming in there. So good looks, Orion, nice. Any other names that you wanted to go through on your list?
No, I think we built out a bigger list a couple of days ago, so I haven't updated my focus list yet. But these are
Yep.
some of the ones I'm watching. I think there's still, plenty to watch. There's not enough to say, just shut things down like we could do in 2022 and come back a couple of weeks later and nothing's changed. I think the market's more consolidating than calling it a year at the moment. So.
Yeah, we've talked about the strength in the pharma space. Do you want to bring up, LLY, Amgen, go through REGN, some of those charts holding up pretty well as well?
Yeah, so LLY is one of those, like if you trade it on the weekly, it looks like it just goes up forever, right? But this one is acting really, really well. The only thing that I do not, I mean, over the last couple of days, the volume has
Volume.
dried up quite a bit. So if it were to come back in and kind of search demand right around this area or this gap up range, that would be perfectly normal. Yeah, that's one. And we discussed a couple, right? BBIO
Were you
was.
watching 500 with LLY as well? Obviously the market keeps correcting. That could be a key level to watch. It's the low of that kind of gap up day. Yeah, and 500. Yeah.
Well, I mean, so the way I trade, for me, it's like, okay, LLY is holding up good, but I won't really trade it because I just look for a lot more. If you
Faster
look at this
movers.
ADR, it's
Yep.
2%, right?
Yep.
So the average daily range over the last 20 days on this name is 2%. For me, in my trading, I just don't. I like the ADR 20-day closer to 4 or 5%. That gives me enough, and I can time those stocks pretty well. Gives me a better return at the end of it. But the fact that it's holding well means that stocks that in this pharma space will also be holding well, and that's something to watch. Like something like when EXEL is moving that we discussed. This one tends to frustrate a lot of people, but when it does move, it shows you that the pharma space is pretty good. And we also touched upon PPH earlier, which is kind of looking like a flag. You could look at the holdings of PPH as well, and you'll see most of them are kind of looking similar to what the ETF is doing. So maybe a good time for questions, or we want to keep going with charts.
Yeah, let's take some questions and yeah, drop some tickers as well in the Q&A section. Please don't just put it in the chat, put it in the Q&A section. Otherwise, it's going to get lost here. All right, these are some names from Mugu. We already talked about Upwork, but Coursera and Fastly. So COUR to start with.
Yeah, we discussed this one. I mean, this one's acting really, really well, very similar to VRT these two particular days, right? Even though the volume on Friday wasn't increasing. But this one, again, the whole, consolidation here while the market was pulling back is right around that 15 area, and now it's rallying up. And if we were to zoom out a little bit on this, just to see how it looks on the bigger frame, there is, it's right at that neckline right now. So I feel next week this is going to make a decision. It could maybe gap up, fade, and come back in and consolidate once more because I feel the volume's not too high. Or if it were to power through this closer to 17.5, right, that would complete this entire kind of bigger consolidation that it's built over the last couple of months. So I think it's one of those inflection points. Yes, it acted well last week, but there's a ton of, if you look to the left, there's a lot of overhead resistance, and it could get directional. If it were to cut through all that supply, it would really mature as a stock. If not, I think that this, if I were to anticipate, it might try to go, will fade, and then come back, pull back for a few days and see and attempt it again. Usually things, when they're at the neckline, usually takes it, 2 or 3 attempts for you to get through all that supply. So
Yeah. And do you want to show quickly for any stock in DeFi, if you're curious about, what's the story, you can hover over the ticker. This one is online education. Probably some of you have taken maybe some classes there. Yeah, did you have something to add, right?
no, I was just saying this courses, they offer courses for you to take. So
Yeah.
it's very similar to Udemy, right?
Yeah. So it's kind of disrupting, colleges, that type of thing. So an interesting story there to keep an eye on from a recent IPO. FSLY, this one's been acting pretty well recently.
Yes, this one has been
I know Drendel at TL has been watching this one.
so this one again, it's now going into this gap up area. So this thing can move super fast right here. Like it's completed this, whatever this was, gap down, stay down,
Hmm.
gap down, gap down base for a whole year, right? Year and then some, a year and 6 months. And now we're going into this area where, whoever was caught off guard, or if you got short here, now you want to cover because you're underwater. And just from a psychological perspective, I think this one's starting to, it could get really directional and could move quickly in this space. So this one's a really good one. What I would do is kind of, I would always prefer to get in closer to the 20, but given the market, it's a little bit tough right now to have bigger conviction, especially in a name that's just coming out of, I would say, a bigger base it built over the last 18 months. But if it were to go sideways a little bit, maybe come back in a little more and then attempt it, then I could get on for the right. But definitely, relative strength. We got big volume bars that kind of started it all. And now we're going into that gap area where it gapped down a whole bunch. From a earnings sales perspective, I don't see much changing, right? We're still seeing variability in their sales estimates, and their earnings from an EPS perspective, they're not going to go positive until 2024 Q4. So like next,
Yeah.
a year from now. So
And revisions are kind of mixed here. So
yeah,
up and down. Yeah, can you zoom in real quick? Because I think this is a good example. Yeah, zoom in really to the last month, pretty much. So let me break out the annotation tool here. So just some things I noticed about Fastly. We had prior uptrend, it was showing something there above rising 10-week, all the moving averages. Right before earnings, we did have a sell-off, but then immediately we get a gap up expectation breaker on earnings. Rai, can you click that earnings? I think there was a surprise maybe here.
yeah. So if we were to look at that, 60% surprise on
Yeah.
EPS, very smaller surprise on sales.
Yeah. So that, a nice callus there. If you hide that now, yeah, you can always hover over that in deep view. We get a gap up. Then, the overall market obviously is a factor here. We pull into that 21-day area, form a little bit of a range. You can draw a tight range here. And then look at this day here. This day before it broke out, this is what you see before a lot of large directional moves. You're in an overall range, and then it gets really tight and compressed. Volume is nothing, and it's also in the wick type action where it's super tight. Basically, there's no sellers on this day. Just everything is tight, 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 and then the next day it explodes through this high as well as this prior pivot and starts this recent explosive move. So Yeah, a good little case study there of what to look for on a breakout, and also looking for some relative strength. And even though it pulled back and gave up a decent chunk of this bar, if you're in from lower, you're still you're in the green there. Maybe you took
Letting
some
it
off
work.
into strength here, you're letting it work, and then the next day it reconfirms higher again, showing the strength and takes out these highs, and new 52-week highs. That's never a bad thing. So yeah, definitely something I have my eye on for a pullback. Next time it gets to 21 EMA, I'll be watching that one pretty carefully. And Tyler points out 20 whole number as well. If you want to touch on that, that's your expertise.
Yeah, so it kind of came back in and then, came back into that 20 area, held back up. But I really like what you said. This consolidation right here, on the down days, you see volume is below average, right? When it came off of this and went into this consolidation, there was a lack of sellers that kind of made this happen. And then when it powered out from there, it's basically what Minavini calls as well a low cheat or something. So
Hmm.
could be kind of that as well. So inside day, lower volume, lack of sellers, buyers come in. Everybody in this range that was expecting lower is now going to cover, and anybody that was watching this out of this consolidation was also going to buy it, right?
Yeah.
So
Yeah, and
that's all.
and you see that type of ranges at different areas within this life cycle. That's how basically stocks start intermediate term bottoms and change trend. That's the Oliver Kell wedge pop, which you should definitely learn from him. We've got the masterclass if you want to learn that. But yeah, that's just what I wanted to point out here. Let's see, we covered Upwork already. Um, Tesla. Let's bring up Tesla, because that's constructed the past few days.
Yeah, so this pullback kind of held within the range. Yeah, I like where you're drawing the lines that correlates with this
21 day. Yeah.
declining. Uh, yeah, so if it gets out of this range, that could get going, and maybe we have kind of, a handover of the baton type of from NVIDIA to Tesla could be the way that this goes. But that's definitely, the pullback was on below average volume in this recent range, and it's very easy to watch. Basically, the 65 EMA is kind of holding it down, right? It's bumping its head. So if it reclaims that, that could be a catalyst for this to kind of put in a bar to the upside.
Yeah, and again, this downtrend was started with the gap, nasty bar there. You want to step aside, breaking this short-term uptrend, breaking the 10-day, closing below
Yeah,
the 21-day. There are warning signs that allow you to step aside during this type of downtrend.
this I think correlates well with the Qs and the SPY, right?
Yep. Yep.
Basically this one was leading, a lot of eyes were on this. It went from 150 to almost 300 areas. So it doubled. And then this kind of was, pushed off the cliff with the Qs as well. We break the 21 day, like Richard said, and then we roll over. So I like it, very easy to watch 240 on this and just see what it does versus that.
Yeah, and again, we have a range here. It breaks out, holds that level pretty much, and then ultimately pushes out. You can draw another range here. But yeah, you've got the launching pad right here. If you want to maybe touch on that, because some people watching might not be familiar with that concept.
Yeah, so where I would kind of get involved in this name would be right over here, like right here, right? So what it does is it pulls back in, right? We have a gap down, increases demand. It tries to break down, it doesn't, comes back out. So you let this happen, right? You let this happen. You could guess, you could buy stock here and then sell it here and then try to buy it here and then sell it here, or you could just let it form. That's the other way to do it. You could track it. Yes, you're not going to get the best possible price, which is the low of this particular day. That's perfectly fine because you can't position size with conviction right around here. So you let it work, let it work. And then the way I would do is, so moving averages kind of come in and converge, right? So at this point, it's saying that on a 50-day, 65-day, 21-day basis, the price has not done much. So it's built kind of this full out base over 50 days, 21 day, and 65. And this consolidation right here is where I would get involved, right? It's very simple. It builds it. It's above the moving averages. Ross always says when things moving averages point to the upside, it's much easier to manage risk and it's much easier to catch this trend than it is to guess what might happen underneath the moving averages. So, um,
Yeah,
But this
and
one, I mean, I think when you double, right? We've doubled and we come back in, we just need a little bit of time, and I think 240 could be a good spot to watch.
yep. And again, you always want to correlate it to what the group's doing. A lot of the other EV companies look similar to this, maybe a little bit weaker. LI is a little bit weaker. I think Neo is the weakest of the bunch. But when they're all forming the launch pads together, they're all setting up there. That's a time to really be focused on that type of group because that's where the rotation is going. What's creating the launch pad is accumulation by institutions. So we're just kind of reading the footprints of them. Let's see here. Yeah, you want to touch on Uber because I know you've been watching this one.
Yeah, so Uber, I think, the character of the stock has changed quite a bit. If we were to just zoom out on this and
It's
just
done
see,
nothing.
let's just get rid of everything and zoom into the price action. So the way it traded before, right? The way it traded before was random gap downs. We see a random gap down. It reported earnings, it goes down. We see a gap up on earnings that's faded, right? So it's very choppy. But what's changed quite a bit is in the recent action or this gap down, price ranges are much tighter. The action when it tries to, it's tries to break out, fades, comes back in to the rising 21 day, holds it and keeps going. So it's very, deliberate, tighter action on a day-to-day basis. I don't see some random holds in the chart from this particular day. So I feel, things have changed quite a bit with the way this stock is starting to trade. Now we come back into the 65. This orange line here is a 65 EMA, and this red is your 10-week. It's just consolidating within this range, and I really like what Richard said. What we could see is as it goes sideways, there's a lack, the average volume, the volume trading as it builds this range is below average. And as soon as I think, we reclaim this 45, 50 and 45 area, maybe on increasing volume, we could have that bar very similar to FSLY that could potentially happen. So if you're watching this, very simple, set an alert at 45, 45, 50, 45, 75, and you'll get multiple alerts coming through on this if it were to come back out. And then the easiest one is just keeps going down, right? That's the easy way, where it breaks the 65 and the volume increases. That tells us it needs a little bit more time. What I would watch if that were to happen would be this particular range. I think is going to be really important if it ultimately really wants, a bigger base, which I personally don't think this is going to do. I think, this is going to stick around this area. It's going to break above that 45 on increasing volume, whichever day it does. And we'll see kind of a rally and an attempt to right back to 48. So
Yeah, look at how it held the 65 EMA. That's what Ross really looks for. When stocks break below the 50-day or 10-week, often they get picked up at the 65 EMA. We saw that. I think if you bring up Tesla, that's another recent example. I believe so. No, that one broke below, but there's a lot of examples in the recent cycle where stuff broke through the 50. Everybody's like, oh, it's going to zero. It doesn't look good, and then it gets picked up at the 65, holds and builds another base. So there's been some requests for some AI related names. If you want to bring up, AI or PLTR, I think would be good to start with.
yeah, I mean, Adobe is also considered
Yep.
AI now, right?
Yep.
So that
It's
one
got
is
the
holding.
generative, yeah, all
I
that
mean,
stuff.
you
Yeah.
can say Adobe is integrating AI, Google is integrating AI, right?
And these are holding
All
up pretty well. I
Yeah,
mean,
and all of these stocks, I don't know about AI. AI is not
yeah,
holding up, but
the bigger caps.
that may have to do with kind of retention. But this one is kind of toast. You kind of have to wait even Friday, then rally. So that tells you something that it needs a little bit more time if you're going to be bullish on this. It needs, and then it's not even above the 10-day. So even though we know of stocks that made a higher high on Friday, this one didn't even attempt to, it stayed around the previous day's low. So this one needs time. And I think it's a good one to analyze as well, because we have this initial run purely based on story, right? A story catches fire, and we see all of these, big spikes, and then it very typical action of a stock that will trade on a story, and now it's gonna go. This thing's gonna go into a bigger base. It needs to mature. If this company is actually going to make money and stuff, it's going to go into a bigger base. You just have this say maybe it comes above 33, put an alert and forget about it. But I think there are better stocks like Adobe, Google, which other one? PLTR. I don't think. I think PLTR needs a little bit. Like, look, Friday we had a rally, we had stocks go up. This one didn't. So it's just saying I need a little bit more time. Don't look this way yet. That's all it's saying at the moment. So, any other AI related?
Let's see here. SMCI, if you want to bring up that one.
Yeah, that one's already up.
Oh,
Yeah,
you're
this
ahead of me.
one. Yeah, this one is. It's gonna take.
You got that gap down on big volume, yeah.
Yeah, the gap down's on big volume. It tried to rally with NVIDIA's earnings, and now it's very similar to NVIDIA, except this one's at the lower right of your screen. NVIDIA is at the top right. So, and that's a conversation we had in our TML talk as well, is if Thursday the situation was NVIDIA holds 500, do you look for a proxy name because you feel like NVIDIA is up 9% and you don't want to buy new stock, right? That was a conversation we had on Thursday night. And something, I'm adamant on, and Ross is, you want to pick the primary, like the top dog in terms of leadership. And that's not this stock, that's NVIDIA. So this one's saying, I need time. It was a good buy right here, right? It gaps up, tightens up, and then, basically doubles and then some. That's the time for, you get involved here. But at this moment and this point in time, you don't want to go something that has huge overhead supply and immediate, like a couple of, 2 weeks ago, it gapped down on giant volume that was bigger than the volume that it gapped up on right here. And it's telling you I need time, and there's no reason to pick this one over NVIDIA at the moment, right? NVIDIA is above moving averages. It's considered better. SMCI is below moving averages, gap down on big volume. It's really that simple, right? So.
Let's see. John asked for PDD. I don't think I've looked at that one in a while, but I know China names have been a little bit interesting.
Yeah, I mean, so we see a higher low of the structure. We see kind of like a smaller launch pad area, still a little up and down. And now we see another kind of launch pad. I unless there's some sort of, something coming out, I don't know. But all of them don't look that good to me. Yeah, no, I don't, I wouldn't personally, I mean, maybe it works, right? Next week it's up like 87, and you could say, I've done that to quite a few people, including Grendel, about coal stocks, right? Because I don't like the price action on them. They can move and rally without me, and I don't need them to make a living. That's perfectly fine. It just doesn't match how I trade. That's perfectly fine. But yeah, I think this needs a little bit more time at this point in time.
Yeah, and there's some requests for NEWR newer.
This one is bought out.
Yeah, that's why it's tight. So yeah, that's an important distinction. Yeah, so
yeah,
just because. Yeah, go ahead.
Yeah, sorry. You go ahead.
No, you go ahead. You go ahead. Go for
it. So the fact that it's trading like this, if we bring up Activision when it was bought out, right here, right? Microsoft placed a bid for Activision, then something happened. They said we don't, maybe rejected or compliance or whatever, and then now it's back. The bid's back on. You generally want to avoid takeover space. Is a whole specialization that people do, where they look at different things, and it's a whole different market, right? So I don't know, whatever the deal is here and whatever they got taken out for, it's much more fruitful when you could buy 10 million shares and make 20 cents on it, right? It's much more fruitful, but for retail trading, like, this is bought out. Just forget it even exists.
It's not growth momentum. It's arbitration trading.
Yeah, exactly.
Let's see. ANET. Let's take a look at, or did you want to bring up this one?
Yeah, no, this one I saw mentioned in the chat. So I think, this one is acting really well. I think it's going to consolidate. We just need a little bit more consolidation. If we were to come back down into this 150 area and then this high volume gap up range, it would give us a little bit more info, but definitely one to have on your watch list just to track how this forms over the next couple of days and weeks. So we got this big volume on gap up on earnings, and now we see some sideways. So the more sideways we go, you could put a simple alert at 160. If it were to get above 160, you could see the new formation, or if it were to get into 150, you could see, but a little bit more sideways will build a new pivot on this name. What was the one you wanted me to go to?
ANET. ANET.
Let's see. So this one, I mean, Ross likes it. I don't. I just think there's it's a
Some
little
damage.
bit wimpy. Like there's some damage on this. I like patterns to be a little cleaner. This one will look so clean on the weekly. Look at it. Like Ross is probably looking at the weekly, so very clean on the weekly. It's almost just like trending above the 40-week line right here. But Richard, maybe you want to share your thoughts on this?
Yeah, kind of similar to you. It has trended a little bit above the 21 day in the past, but we've also got these random gap downs and and kind of like what you're pointing out, we didn't have much of a rally attempt on Friday. So for me, I think there's better options out there than this one.
Yeah, this one's like more you need to know a little better, a bit, a little bit about the story. You look at the weekly chart, you're accumulating millions of shares instead of hundreds. And that it's good from that regard, but it's I hate names where you could clearly see there's more red bars, and those red bars are vicious. Right, this is a vicious bar. This is a 3-day. I would not hold
Down
it.
30% or 20% 3 days.
Yeah, so it just for me it's like more this type of action, right? More blue bars, tighter action, more blue bars. It gives you a better trend to work with. I don't think this is a better, looking trend. So
Yeah. Let's see. We're at around an hour here, so we'll take a few more. From Joe, he's got some suggestions.
It's 1 o'clock.
Yep, thank you for that. He's got some lower price stocks I know have been moving pretty fast. If you want to pick any of these, VFS, ACHR, Joby, CVNA, Carvana, or Affirm. Some of these have been
Joby
acting well.
definitely not. I think it's going to need a little bit more time. CVNA is acting pretty well.
Yeah,
right?
compressing against the 10-week there.
So like volume's all gone away. Yeah, this is a nice one. This is very similar to your Tesla topside range alert, right? Tesla around 40, CVNA around 42 will get your momentum market going a little bit, because this has gone from what, $9 to $55. So now it's just, and the fact that the volume here is like completely gone tells me that if this were to break this range of 4150, volume is going to come back in to this, and it's going to break this 2-week range it's built. This is a nice from a swing trading.
Yeah, this is more of a swing trades type stock. I mean, if you look in history.
Let's see, the ADR is 10%.
Yeah.
So be ready for volatility, right? ADR tells you this thing's going to swing, and whenever it swings, it's going to swing an average of 10%. So when you go short, you expect 10% drop in a matter of a couple of days, and if it goes, it's gonna really reward you. So yeah, this one's definitely like a pure swing trade type of name, but I like what I see. Like the whole pullback here is no volume. We have a 2-week range, and if this were to break to the upside, a whole bunch of volume is going to come back in, because all these people that missed this from 9 to 55, you bet they're watching this range right here. So
yeah,
it's going to be.
Go to a weekly real quick on this one. Yeah, so you've got the daily pivots lining up with the weekly pivots, so that can kind of add extra fire. So I'm talking about the last 2 weeks; those highs are pretty much the same, and then you've got that range, and look at the volume just disappearing. So we'll see what happens. But yeah, again, this is a fast mover, more of a swing trade, day trade type name than one you'd want to position trade on. And I don't know if the fundamentals even matter on this one, to be honest. This is more of a meme type. Yeah.
But yeah.
VFS I know is an IPO that's been super powerful, short-term extended now, but if you want to bring that one up.
VFS.
Yeah, what's the story on this one? Is this an auto company? Okay, interesting. Are they EV?
It says manufacturers cars, motor vehicles.
They trade everything, huh? E-scooter.
Anything you trade smartphones?
I don't know. Gotta learn more. But they've got e-scooters. Yeah,
What
so
is
it's got some
a divestiture or something? What's the Singapore EV? Okay,
yeah.
Singapore EV. Interesting. What was the other company in Singapore? SE or something?
Yeah, SEC Limited. That's
That,
completely different space though.
yeah, but I'm just saying like that one
This one's
ran.
gotten destroyed. Yeah, this
Yeah,
I mean this had a
destroyed, but
beautiful
like
run.
look at this. This
Yeah.
was like so good.
I mean, from its IPO like primary base, this has had a major go to a weekly on this because it's a great stage analysis. I mean, look at that base earnings gap, I believe, out of that base, and then yeah,
So
it's set up again in
we
2020.
went into stage three right here and we've never looked back.
Yeah,
Right?
stage
Stage
three,
three,
stage four. Yeah.
stage four right here, and then right back down. A lot of these, I mean, like look at PayPal. Look at this, stage four,
Yep.
completely obliterated. SQ, all those old names completely obliterated. So, but yeah, that one's a good one. I might take a look at what VFS is doing because Singapore companies seem to know what they're doing.
Yes.
And
Joe says it's a Vietnam EV company, second highest market cap car company after Tesla. So interesting. Vietnam EV. Okay, cool.
definitely one to track to see how it goes,
Yeah.
especially IPO, right?
Yeah,
So
we know with the IPOs they can have amazing runs, but then they'll most likely give it all back at some
like
point.
Kava.
Yeah.
Kava's amazing, Kava's not amazing,
Yeah.
right?
I'm personally not the biggest fan of Kava, the store,
Have
but
have you been to one?
yeah,
Or
I mean, my area they were just kind of around. Chipotle is more my kind of food, but I mean, it's good. It's just not my preference. So I hate the stock. No, just kidding.
yeah, no, this is just saying it's gonna need time. So lower low on Friday. So that tells you.
Sorry. People want you to post those ETFs.
Yeah,
You,
we did.
no,
I can
I
do it
don't think you
again.
did. It was when you kind of lost connection for a sec.
Oh, my bad.
Yeah, all good.
Here we go. There
Let's
we
see
go.
here. You want to take one or two more?
Oh, by the way, I just want to be clear. This list is stolen from somewhere. So this is like I got from Patrick Walker. I took Patrick Walker's ETF list and I added what I felt might be good additions. So this is primarily his list, just to be clear.
Yeah.
Yeah.
And he's the man.
Yeah.
Um,
SG.
yeah, sweet green. Yeah, I like
Oh,
sweet green. Good
wow.
salads. Expensive salads though, but they're good.
No, look at it. Look at the stock. I mean,
Yeah.
it's not bad. We should have this on our bigger list
IPO.
for
Yeah.
sure. Like I like when the pullback just dries up the volume. That shows you a lack of sellers, and if the market's going to be ready, these things are gonna go. So we should
All
definitely
all the MAs are compressing together.
yeah,
Yeah.
this is literally a launch pad.
Yep.
So by the time it gets to 15, this thing's gonna be ready. So
Scroll out, get the full picture. This has had a decent correction off the top, so it's a more
yeah,
mature IPO.
just set an alert quick.
Yep.
Yeah,
Yeah.
this one from a weekly, it's just starting to, we had our stage one going into stage two, and it's kind of still
Forming a
trying to
break
break
Yeah.
down, yeah. So if we get above this 15 range somewhere in here, right? We'll go back to stage two uptrend. So
Yep.
interesting.
Let's see here. Um, you want to take one more?
Yeah, yeah.
MOD. I'm not sure what that one is.
OG, yeah, that one looks good. Again, this is one of those, like I said on this gap, MOD frustrates the hell out of me, but it's doubled. So that shows you not always right. Yeah, this one's acting well. I mean, look at it. Above the 10-day, above the rising 10-week, above the 21-day. Let's look at the numbers a little bit. Increasing estimates. right? Pretty solid sales estimates. Let's look at it, annual figures. 2025 projection is for 50%. This should say 2024. That's a bug we're working on, but 2024 estimates are pretty good. Yeah, this one, I mean, yeah, I would keep track of this. This is looking really good. I just wish it was a little bit more liquid from a dollar volume perspective, because it's only trading 500,000 shares for a $45 stock. It's not bad, right? You could accumulate stock in this quite well, and it's acted well. So this one's one of those like VRSK, very steady uptrend.
Yep.
This, if you look at VR, is bigger correct, and then now it's like all-time highs. So if you go back to MOD, very similar look. This is quite a strong trend, in my opinion. So
There's some requests for PNW.
I think that one gapped down. Yeah. So
Gap down, then up, and then yeah.
yeah, just give it time, right? Give this one time. I don't like this. Like gap down, gap up. Just trying to figure out what it wants to do. This is far more tradable. This area is far more tradable, and it was good. I know Joe Fahmy was on top of this early in when the trend turned. He was really on top of this name, I believe. But this one needs a little more time. Again, not a higher high on Friday. Tells you it needs more time. Undercut the low of the previous day, even though the market was up, it needs a little bit more time, right? Just give it a little bit more time. Maybe set an alert at 238. See how it gets to 238. Is it one bar? Is it several days up into that? And then from there, you can judge the pattern again. So there's better stuff out there at the moment.
Yeah, you want to bring up KD?
Yes.
Because there are a few data processing stocks that were acting well. So this one's got a nice gap up on volume and compressing, forming a nice tight range there on low volume.
And also, like, the pullback is relatively low, and this day where it got scooped up was on higher volume, so that's a positive. And now it's just going sideways again. The volume's dried up. So from price volume perspective, if we were to just zoom in and look at since this gap, pretty good, right? Again, it has that little FSLY that you talked about, Richard, like that range on lower volume. So it has that going, and then when it breaks this, we could potentially have a trade to the upside here.
Yeah, and a similar looking one from the coal space, CEIX.
Yes, we've looked at that one yesterday. I think we have a whole list in our report this weekend, so of coal stocks that are acting well.
And then did we bring up ESTE, another kind of similar?
Yeah, that's a
high
oil
volume mover.
Yeah,
Needs a
Euler
little more
gap.
time, maybe.
Yeah, I mean, it's in the right group, right?
Yep.
So it's in the right group. We see rotation into that group, so this thing can go. This one's a good one to track. Given the volume of the gap, it's pretty good too. So yeah, it's more a theme name, right? Once money's pulled from Oilers, then you have to wait a couple of months for it to come back in. Very dollar dependent trade as well, and based on the currency market. So
Yep. Did we look at app yet? APP?
no, that one Nick's in this one. So he's held it, I think, from this range. He got in at the first gap up. He held through this, all of this, and he experienced this big, 19% gap up on this day. So this one, again, amazing. Above the 10-day, volume is kind of drying up. So if it were to come back in to a rising 21, that's perfectly fine, right? It goes into this HB. So what I tend to do is this. I know that this is my HB range. And if it were to pull back into this and hold while the market's correcting, that's perfectly fine, right? It could come back in. We get a bigger volume stick where it says, okay, enough is enough. I'm going to hold 35, 36, 37 area. And then you could start building your position into this. Yeah, but this is the second gap. And then I know from a weekly perspective, it also this was right at the neckline into earnings, so gapped up into this neckline. So it's natural for it to take time to cut through the supply here. There's a whole bunch of supply. But I think once it gets above this range, it might it's going to move a little bit quicker. So this is the last big consolidation before it went from 30 to $9. Now it came back up to 40. We see a few skyscrapers that are green on the way up. So we need a little bit more time to cut through here. And then I think we're going to move a lot faster once we get above this range.
Yep. And WFRD also in the oil space. That's one that was on my wide list.
Yes, this one's acting well. So if we continue to see rotation into oil, this is probably a good one.
And then I noticed a little bit of a trucking theme. I don't know if you did, but ODFL, similar look kind of.
Yep. I'm not, I mean, for me personally, these things are frustrating, but
Yeah.
it's good to track them. Like it tells you what this tells me is when we see rotation within the markets, money's not leaving, and that this correction is more a rotational thing where money is being put from one group to another, while everything that ran 100, 150, 300, 200% is resting, right? And that's perfectly fine. The issue would have been we don't even see these ODFLs and LLLY and all of these stocks hold up. They're correcting with the market. The market's correcting, growth is correcting, and money is leaving the markets. We're not seeing that. So that's what's positive at the moment. We're seeing rotation in and within the market. So
cool. Let's see. Do you want to start wrap up and mention SummerTL?
Yeah, so let's talk about just the general markets. So you want to, set your alerts on top side ranges. When a lot of them trigger, it's going to tell you that the market's about to go to the upside. Then you can start kind of, increasing that exposure. Like we saw, 10 to 15% exposure is relatively where it should be at the moment. And then as we reclaim the moving averages, you can step that up from 15, 20% to 30, 45%, and just have some sort of system. It shouldn't be based on what someone else is saying, or they might be right and wrong. Does not matter whatsoever. You want to have your own, I want to increase exposure when the market's doing this. I want to decrease it. I see rotation within the markets. I don't see a reason to be overly concerned, but a reason to just wait and watch and be on the sidelines just to see if we're going to get that momentum swing trading type of environment that we had over here back into the rest of the year. Other than that, I don't think I have much else. You just, take it week by week. What's most important is having some sort of system to allow you to make your decisions by yourself, day to day. So.
Yeah. And just mentioning, we're kind of currently running a kind of secret sale over at TraderLion on every single masterclass. So I'm dropping a link and the code in the chat here. You get $100 off using that code on any masterclass. You can use it for multiple if you'd like. Do you want to bring up TL University just to show the classes we've got currently available? We just wrapped up the John Boyd Historical Analysis Masterclass, where we had many different guests. We had Jim Ropel for 3 different sessions. Dr. Wish was a guest. This is the Historical Analysis Masterclass, and we covered over 120 years of history looking at market cycles, studying what it looks like at the turns, studying all the model stocks, and as I mentioned, really great guests. Yep. Yeah, we got Lisa who's there. I think I saw Martha earlier as well, Michael. Yeah, so that's been great. Of course, we've got the Stage Analysis Masterclass with Stan Weinstein himself, a really great foundation in that whole system, goes deep. We've got a case study earlier this year where you've got his institutional letters that you can study. That's invaluable. Moving down, Oliver Kell's Swing Trade Masterclass. This is fantastic. If you want to learn his full system, he lays it out there, and he really lays it out there. The good, the bad. He talks about his struggles. He talks about the work you actually have to put in to get to that level where you can achieve 941%. If you want to learn how to achieve triple digits, there's not really anybody better to learn from than Oliver. He's the record holder in the U.S. Investing Championship, lays out every step of his system from screening, finding top dogs, entry setups. I saw a few people mentioning they want to focus on entries, position management, portfolio management. So again, Rai kind of has touched on this a little bit. When you get a big winner, you have to make sure that moves the needle at the end of the day. And that's a key part of his system. He talks about mindset, everything is laid out in this class. Highly recommend it. I learned an incredible amount from it. We were just talking to him the other day. He's actually watching it back, is like, wow, this is great. So yeah, we're really proud of this, and it's a really amazing resource. Moving down, if you want to work on your mental side, we've got Jared Tendler, fantastic educator, really dives deep in the process. There's live case studies throughout where he basically walks you step by step through the process of identifying a mental game block that you might not even realize, and then how to address it and become more in tune with your emotions so you can actually use that as an edge. Really interesting. And again, he's a great guy, fantastic educator. And lastly, we've got the IPO Masterclass, 4 amazing educators, the Lifecycle Trade team, and they not only share their insights from their research into IPOs, super growth stocks, but also they dive into their individual trading systems. Kathy talks about, holding stocks for years. Eve touches on, trading those high velocity moves. Each of them has their own styles. Kurt mentions options, dives deep into that. So each kind of brings their own perspective, and it's like a mini masterclass with each of them individually, as well as the whole kind of framework that is the life cycle trade. So, and lastly, we've got our own leadership blueprints, analyzing the footprints of institutions. So, Rai, anything else you want to mention about any of these classes? Anything that you really, maybe from John's, what was your favorite part of John's?
I think,
Oh, you were a guest as well. I forgot to mention you. You went over your Livongo trade where you nailed 500+% on that one. So that was awesome. You went
I think
in detail.
John's class is what people do individually themselves, but if you go through the class, you're gonna go through it with John, basically. So
He's the guide.
It builds you up decade by decade as to what happened in that decade, the winners in that time span. And at some point, he relates the current markets to some other market, and he's doing all of that based on his studies and experience of what happened in different cycles. So the point of this class, when we initially talked to John, was to give someone the full stock market history in kind of one package, and I think we more than achieved that. And he was great. So he has a lot of different charts, a lot of historical charts that he went over, in a lot of different market cycles, over 6 or 7 different market cycles, that gave you an idea of this market cycle was based on interest rates or going down, or this was based on this particular event, or these were the leaders in that particular cycle, and they all did the same thing. It's just different cycles, right? So this, I think, that it serves a very different purpose, but it helps you because you can then connect the current markets and in the future back to some point that we covered with a different market cycle back over 100 years of history. So yeah, I think all of these are great. I mean, Oliver's is over the top. Stage analysis with Weinstein, like that was a
you get to learn from a market
crazy
legend. It's
good.
Crazy. Yeah, we
Yeah,
talked with him a lot, Rai. As we're he every single word of that is from him. That's him talking to you. So it's amazing.
Yeah, no, this one was really unique because he's been in the markets for 50+ years now, and he created a whole system, and then his book was published back in the 70s or early 80s, and then this was the first class that he's done ever. So this was really good. So.
Yeah. And he's so fun to listen to. I mean, it's infectious. The Q&A videos, it's great. It's great. Let's see. Yeah, John's we went through every single decade, and there's multiple uptrends, multiple downtrends. We talk about the leading stocks in each of them, how they set up, how they ran, how they topped, and we touch on how the legendary traders from the past traded those cycles. So you get to actually see how it's applied. And then we take it a step further. The guests each brought their own perspectives to things, because there's the guidelines, the principles that these legendary traders and top traders share, but then everybody adds their own twist, their own entry criteria, their own ways to manage things, manage their emotions. And the guests, Jim Ropel, Matt Caruso, Oliver Kell, Rai, Eve Bobach, Amy Smith. I already mentioned Jim Ropel, but he came on 3 straight times. They add so much value to the class because you get to see them break down their trades, what they were thinking about during each different step. So just the guest presentations, make this class. So Yeah, and Purvish, you did a great job with the class homework. So yeah, definitely go ahead and take advantage of the sale. Like I said, this is available for only a limited time only. Use code SummerTL in the coupon code slot. I dropped the link one more time to the university. But yeah, I think other than that, thank you guys for spending your Saturday with us. Hopefully you guys learned something. I know I always love chatting with Rai about the markets. Rai, anything you want to leave everybody with?
No, I think just take it day by day, have your own opinion, have your own system, trade upon it, and make sure you're making your own decisions. I think that's most important. And in terms of correction, if this deepens and we have another bear market, who knows? We just have to take it day by day. And as long as you have a system and you made it out of 2022, I think that's the biggest achievement. It's not, it shouldn't be understated because this was one of the most vicious ones in recent times. And if you came out of that and you didn't lose a whole bunch of money, that's a huge positive already. So I think with that, we can end it
Well,
right there.
I'll add one last thing. Just harnessing Jim Ropel. Think about how many bull markets there'll be in the future, and how many market leaders, 5 to 10 market leaders during each of those uptrends that you can catch and make life-changing returns. I mean, just be ready for that. Preserve your mental and financial capital until we get that easy dollar environment. So, yeah, the golden goose, as Michael says. So, yeah, this is recorded. We'll upload this, and with that, have a great rest of your weekend. Cheers.
Thanks, guys. Thanks. Have a good one.
Yeah. Bye, everybody. Take care.